Good afternoon, Frank Watkins. It is the 13th of Feb 2026. The All Ords closed today at 9138. We're actually up 184 for the week. After a day like today, it doesn't feel much like you've been up over the last week. However, at the moment, it really is looking like a bit of a game of whack-a-mole every time the market has a good rally and looks very, very strong. We smack it down yet again. Anyway, that's the market. Now, just want to run through a few things that I haven't mentioned since 2 weeks ago, given that Kylie did last week's broadcast. So, firstly, a few things that we've exited and reasons why. And just in general, volatility is a sign of a top. So are we having a top now or not? I don't particularly care, but when things get like this, I think it's a good chance to get rid of some stocks that perhaps you don't want. Perhaps you're taking profits, so on and so forth. So during the last couple of weeks, we have exited things like WHC. Had a very good run out of this, but exited, I think, yesterday or the day before, but just before today's nice green candle anyway. Took a fair bit of profit out of WHC, pretty happy with that. We met the targets on the ascending triangle here. We had another breakout here. So all in all with WHC, pretty happy. Peninsula, I think we followed this for quite a while. And again, got out of Peninsula, I think. Let me check. I think it was on this day, and then it ran a bit further. Very tempted to get back in, but let it go. And now we're in a situation where I think we can just box this off about here, and if we close the gap here, we might get an entry. Otherwise, it's down the gurgler and we stay out. And again, happy to be out. We took a few dollars out of that. Dragon has been dragging its feet. We've been in there for a bit, and we took a bit of a loss. I think it was 50, 60, 70 cents loss on Dragon, but I just couldn't get over the fact that I think holding on to the top 20 Chinese tech stocks would be a really good idea, but the chart told us to get out, so we took the hit and got out, and right now happy that we did, but definitely waiting for another buy signal on Dragon. APX had a terrific run out of this, and got out on this day here. Suffered a bit for a day or two, but now happy to be out. So I can pretty much do the same as what I've done with Peninsula. Whoops. And whoops. Done this all wrong. Box off. Probably that sort of territory there. Doesn't really matter about the downside now. OBV fading with increasing volume, so that's pretty weak signals. But the next time I look at this might be a break of $1.90, because if we bring in a lot of data, this has been a $40 stock, which is probably irrelevant given that it's now $1.40, but just demonstrating on the chart that this could go a long way, but still happy to take profits when they're there, and then just sit back and wait and see what happens. but definitely keeping an eye on APX. A couple of other stocks. Westpac, I've been going to give up on this for a long time and haven't. I'm still not sure why I haven't. We are showing dividend yield of 3.8, fully franked. Annual reporting season for the banks. Had a good kick, gapped up, that's strong, and today gave it all back. But for whatever reason, still hanging on to Westpac. And then also Woolies is another one. This was again a higher high, higher low setup. It's come up, it's closed the gap, or very, very close to closing the gap. Probably have another look at that on Monday, but at the moment OBV is good. Very, very tempting to get out and take the money that's there. But again, if the world falls apart, it's a defensive stock and people will potentially run into Woolies. So, bit of a dilemma there. So, I'll have to let the data do the talking over the next week or two. Stocks I'm watching intently. Treasury Wines, break of $5.50 roughly, and would have to be on board that one. OBV fading, so I'm not holding my breath, but certainly keeping an eye on it. IPH is another one looking for entry. That's going to be beautiful when it breaks. This is the sort of stock I talk about when I'm talking about stalking a stock. I might have to wait 6 months for that. I've already waited 5. But I think IPH, when it does go, could go well. And bringing in 5 years of data, has been a $10 stock. It's now a $3.50 stock. So room for recovery. BSA, now I put this up on the net yesterday, I think it did a little bit today. That looks pretty dramatic on a 6-month daily chart. Issued cap only 75 million. That is as tight as you'd find anything. If we go to 1 year of data, it's showing today's move in a slightly better light. If we go to 2 years, again, you know, we've been a $1 stock. We're now a 28-cent stock. So good OBV lift recently, good volume increase recently. Moving right on to a bit of a review, GMTL. These are ETFs. I'm going to go back to 6 months data. This is the green metal minerals. If we're going to carry on with all this clean air and solar and all the rest of the EV stuff, then GMTL should continue to perform. Another one in a similar category looking forward is HGen. Now this is hydrogen, a hydrogen global ETF. I don't know what the future is of hydrogen, but while we keep pursuing it, I'm happy to stay with HGen. QRE, I've been a fan of this for a long time. I've been in and out of it a couple of times in the past. But Australian Resources very heavily weighted towards BHP. Unfortunately, I think there's too much weighting given to BH. I think it's about 34 or 35%. But nonetheless, as I said a couple of weeks ago, I think we're just starting to get cranked up with some sort of commodity boom, which will help Australia as much as it'll help anyone else. So happy with QRE. and still happy with Wire, which is the global copper miners. Been a bit wild lately. This is what I mean by whack-a-mole. But I just think copper is something you've got to hang on to for the next year or two or three. So happy with Wire. Another interesting one is food. Apparently, at the end of the day, we have to keep eating. So this is global agriculture. Having been tied up in the commodity market for a long period of time, trading futures markets on live cattle, feeder cattle, wheat, oats, corn, barley, so on and so forth. It's interesting now to be in an agriculture ETF. I don't know what the holdings are. I haven't looked. But at the moment, so good so far. Great OBV. I like the price level, $5 to $10. I think there's a bit to like about food. Asia, we've been in and out of this one as well. At the moment, I think Asia's looking pretty good. And then the old favourite, gear. We still just hold gear. It's a core holding in most of the portfolios. The same as that QRE ETF is holding a lot of BHP. A lot of our portfolios are holding a fair bit of gear and also a fair bit of Wire. But right at the moment, I'm not really going to bother doing a scan. I can't see much point. We're down fairly heavily today. We've got the US market tonight. I'd much rather sit back and see where we are on Monday. So that's it for this week. Touch wood, I shall talk to you next week. Cheers.